Hello, everybody. Hopefully you're having a good day. My name is Andy. My channel is Finding Value. And if you're looking for undervalued investment opportunities, click subscribe. I'm going to go over some technical analysis. I call this one just opportunities. I was looking at a bunch of things. I kind of just threw them all in one presentation. They're not necessarily correlated to each other. I was just looking at a wide array of investment opportunities, things that I look at, I would say quite often. And I'm throwing them in this presentation. So they could be related to commodities. They might not be. I just kind of threw everything in there. So let's dive in, technical analysis. And they're kind of random. So I'm looking at random opportunities and charts. Again, this is financial education only. You guys have to do your own due diligence and do whatever's right for you. Whatever financial decisions you make is your own responsibility. So here's EEM. EEM looks pretty good. I've been buying EEM in the old 401k on this pullback here. And it looks like we just broke to the upside here. So on a big long-term basis, this is looking pretty good. With the dollar declining, I think EEM is going to do very well. EEM also is tied very well with the commodities boom. So if we have a commodities boom, I think EEM is going to boom with it. The returns here are pretty good. And I think it is a lower risk, high return spot that I like to put some money. The demographics in most of the emerging market countries are pretty good as well, which should be a consideration for investment. But really, it's the weakness in the dollar and the commodities which is going to drive EEM higher. Here's Archer Daniels Midland. You can see we were kind of squeezing upward, and we broke to the upside of this trend line pattern. And it's probably going to continue on higher. So that one looks pretty good. This is a larger agricultural company, and I don't think it's going to be a massive returner, but I do think that it's going to return very well, and the risk isn't too bad. It's a larger agricultural company. Mosaic, another fertilizer company. You can kind of tell it's been flirting with this upper trend line, resistance line, support line, all through here. Usually fertilizer does very well in a commodities boom, and Mosaic is a larger company, a little lower risk, good returns company, and I do own a little bit of Mosaic. Contango Oil and Gas, getting in some oil here. You can draw this resistance line across. We kind of hit it multiple times all over the place. Popped up, kind of came back. And if we move out of this area here, I think this is going to look like a pretty good bottom. Good bottoming formation base. Maybe even call it like a triple bottom. So it looks pretty strong. I like Contango quite a bit. Here's Tellurian, just to show you that we may run into some resistance up here. We kind of hit our head here, and we may pull on back or move sideways for a little while until we break out of this upward trend line. Just an FYI. Grand Tierra Energy, kind of through a downtrend line that we broke to the upside, kind of back tests after we break it. And I think it looks pretty good. We've got a little bit higher low here. Not too bad. Not too bad. Transocean, this is a energy services company. You can draw the downward trend line in, broke to the upside, back tested, and now we're moving higher. About to break this high right here. So it's looking pretty good. If you guys like energy service companies. DXPE, another energy service company. They're kind of like the Granger of oil and gas. I think this is the company that you basically buy spare stuff from. Draw the trend line in, and we're right there. We're starting to squeeze up here. Hopefully we can kind of attack this upper trend line here and see what happens. The rare strategic earth metals ETF here, I think it looks fantastic. We had the downtrend line, we broke that, back tested, coming on higher, shot higher, catapulted higher, launched higher, moonshotted higher, whatever you want to call this. Came back, and we're coming through, and we're breaking to the upside here of this pattern. I think it looks pretty good, and I think it's about to make a good move higher. And I'm going to show you one last thing of REMX. I put these blue lines in here, and from here to here, the chart is exactly the same movement repeated over and over, just on different amplification scales. If you look at how this comes down, up, and down, we've got the same down, up, down movement as this here. We came back up. This is just smushed together. Came back up all the way. That's all the way up here. You came down. You come down. It's all smushed up. Come back up. And we're like, we may come across a little bit like this and then move up. So we're right in this section right in here where this red arrow is. I kind of have it off a little bit, but we're right like in here somewhere. And then I want to talk about real estate because I was looking at real estate inventory. This was one number of stale home, no, not that one, sorry. U.S. existing home months in supply. And this is the last crash. You could see that the inventory went way up before the house prices started to crash. I think they started crashing somewhere in this range in here. And then we went all the way up to 10 months. And we've been drawing down inventory because we haven't been building new homes in this entire area. This inventory got drawn down, and we've been in a downtrend the entire time since 2014. So anyone who says COVID caused this is wrong. This has been in trend since 2011, the entire way down, and we're at 1.9 all the way down here. The trend of lower homes inventory, which means higher prices, has happened since 2011. This isn't something new, and this is the real estate. There's a cycle depending on the time of year where this goes up and down, and that cycle continues. But we're down here at 1.9 in 2021. The next one is available inventory, down 86%. This is zooming in on the tip over here that I don't have, and it's just been declining. So I don't think COVID did not cause a housing boom. Low interest rates did not cause a housing boom. Supply and demand caused the housing boom. We've been eating through inventory since 2011. For 10 years, we've been in a housing boom. We've been in a recovery phase. We're going into an expansion phase. And the inventory and foreclosures are going to get drawn down to basically nothing. And then we're going to build our way out of it. So this isn't new. This isn't like, people are like, COVID did this. COVID didn't do anything. Idiots. I'm sorry. Obviously, they don't look at data. Obviously, they don't look at trends. Obviously, they don't look at this stuff, apparently. And it's a lot of people. It's a lot of real estate agents, a lot of people in the news. It's like this just came out of nowhere. It's not. It's a big squeezing up of inventory because we're not building the homes in the necessary quantities to offset the demand. It's that simple. I've watched some Lacey Hunt stuff. He's a big deflationist. I can't jump on board. He keeps talking about this debt overhang with the GDP not being able to repay the amount of debt that we're taking on. If you've got the demographics and the money's getting into the system and the money's starting to go through the system, that is going to be inflationary. I think at some point it could be deflationary, and I could be convinced. I just think it's going to happen after the housing real estate boom. So I agree with them. I think his timing's just off. That's my take on it. But he seems like a pretty smart guy. He makes a lot of valid points. I just don't know if I can jump in that camp at this moment. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.